Well, good afternoon, everyone. It's 3:45 on Friday, the 5th of March. At my talks, I keep telling everybody who listen that at least 70% of the exercise of investing is working out which way the general market is going. And certainly today and over the last couple of days, the general market has been, in fact, moving down. So I'm looking at VectorVest USA and as you can see, an awful lot of red on the front page of VectorVest, and as you can see, VectorVest does not advocate buying stocks at this time. Today, the declines pretty much twice that of the advances, and all of the measures of the trend on VectorVest USA are down. So if you're in the stock market, folks, it's a day to manage risk very carefully indeed. And if you're not in the stock market, well, it's a day to do nothing and to sit and to wait and to plot. Let's have a look at the VectorVest market timing chart. I think I've got it up already. There it is. That's over the last 3 months. Let's look at it over the last year. There's over the last year. And these are the longest measure of the trend on VectorVest, which are known as confirmed calls. And we have to go back. That's the sell-off after the COVID disaster last February and March, and then this run-up, and at the moment this long-term measure of the trend on VectorVest turned down 3 or 4 days ago. So let's have a look at all the measures of the trend. So this is the longest term measure of the trend, turned down 2 days ago. A medium-term measure of the trend, the DEW, turned down at the start of the week on the 3rd. And the short-term measure of the trend, the primary wave, has been down since the 18th of February. And on the front page of VectorVest, we've been saying not to be buying shares since the 18th of February. So just be very careful indeed out there. I have the US markets on the overnight market running behind me on this chart. This is a 24-hour market of the S&P 500, and as you can see, this each candle is 4 hours worth of trading. And for those of you that are Fibonacci students, the market once again stopped at 78% of the last range, and that's where floor traders jumped in and started to buy the market. That level on the S&P is at 3730, give or take a tick, and we jumped off that level and it was sold again this afternoon. This level remains very important indeed, 3729. Far too early to do anything. If we go back to the front page of VectorVest, we should only be looking to buy shares in the US when this pointer moves back into the green, and the advice says VectorVest advocates buying undervalued stocks at this time. So a day to do nothing, but those of you that are in the market, just be careful and watch stops very carefully. And clearly the trick now is to keep all that money that we've made over the last 6 to 9 months, and certainly any positions that I've taken over the last 2 or 3 weeks, I've been stopped out of them with very small losses, but nevertheless I have going at the end of the trading week, I haven't got any US positions at all. If we move to the UK market, we've got some. This is Thursday night's close. We've got a red here, and VectorVest does not advocate buying stocks at this time. The short-term trend has been down in the UK for the guts of 2 weeks. And the medium-term trend is down as well, but the longer-term measure of the trend still remains up. So if I pull up the market timing chart in the UK, there we are, and that's the longest measure of the trend. Again, we've got to go back a little bit. It's more than a year ago now. There's the sell-off last February, and that indelibly printed on my subconscious, the 27th of April. A little bit of a speed wobble here, and as yet the longest term measure of the trend on VectorVest is up, the short term is down. So if we now look, maybe 6 months is better, we look at the medium term trend, the so-called DEW. DEW turned down on the 18th of February. And so those of you that are medium-term traders, look at the quality of these signals. They really catch the turning points. And the short-term trend, primary wave, and that's the primary wave is down for the last 2 days. Well, it took up here for 1 day. If we look at this, it's been down here, and then there was a little bit of a speed wobble, and it's back down again. So the medium term trend is down, the short term trend is down, the longer term trend still up. So I certainly haven't been buying any shares, because I only buy shares when the long term trend and the short term trend are saying the same thing, and that hasn't been the case since right up here on the 18th. So I have still holding a portfolio. I've gone to 30% in cash in the UK. So if I go to that portfolio, I'm reasonably happy with it. Sylvania is nearly up 3x. Italia Mining is well up. In the money in this little GameStop, GameSys. Particularly happy with Bellway, and I think that the building companies should do well with what's come out of the budget over the last day or two. So that bodes quite well. Tristel, I'm very happy with. 4D Pharma is a highly speculative small AIM share. I've got great hopes for it, but as yet nothing has happened. CCC, I'm holding. I reduced the position in CCC a few days ago because it was close to its stop loss, or was at its stop loss. Lion Trust I'm very happy with. JD Sports I'm very happy with. Pershing Square I'm very happy with. Cranswick has done nothing for me, but got a really nice RV, which is the upside potential. Halma I'm happy with. GB Group I couldn't be happier. Games Workshop doing its best to get back up through that 100 level. I thought it was going to do it the other day, and came back in this last little. Let's get rid of all my lines here. If we look at it over, there's a year now. We've got to look back to here. As you can see, there's the February highs left well in its wake, and I thought it was through 100 the other day, but that bad day yesterday it came back. So it looks fine to me. If I'm clearly, as you all know, a technician at heart, I draw a line down here. I thought that was well on its way, and it still could be. If we draw it through. Apart from that one spike, as you can see, it's come back and kissed here, so reasonably happy with that, and it's going to take a while to get back up to that 120 level again. And Polymetal, well, it's underwater. Excellent results this week. The company's come on leaps and bounds. The gold price, I think, is totally utterly oversold, and it stuck its nose above $1,700. So I'm holding on to that one for the moment. It pays about a 6% dividend yield, so I'm being paid to wait. So the portfolio was a mixture of very conservative stocks with a high relative value, upside potential, and high safety, but the odd more adventurous stock as well, such as 4D Pharma. Copper has come back a little bit. I'm still exceptionally optimistic about commodities, but there's no doubt that they were a tad overbought, and will come back a little bit. Copper was off 5 or 6% yesterday. The big winner of the week was clearly oil, and I haven't got an oil stock in this portfolio. More's the pity. So let's see how things go, folks. Let's let this sell-off play out, and just sit on the sidelines. And when everybody's exasperated, and we'll be looking to get back in again. But it's far too early for that now. So Monday afternoon at 1:30, I'll chat to the VectorVest regulars about this. It'll take me about an hour to go through stocks, bonds, commodities, precious metals, and anybody who wants to come along to that's not a VectorVest member, then just give me an email, david.paul@vectorvest.com, and I'll send you off a complimentary invite. So just be very careful, folks. Markets are falling, and risk is real. We don't know, is this just a small pullback, or is this going to be something like what we had last February and March? We simply don't know. So be very careful. Bye-bye.